Hey everybody, welcome back to the channel. Welcome back to Taking Trades. Happy Tuesday to you. So natural gas gapped up higher this morning to kick off the trading session, followed by a continued rise in price, which is probably being celebrated by every UGAZ trader across the globe. Price action broke above the high of Monday's doji candle, which I'll show you in a minute, which fueled it to continue trading to the upside due to the probability of shorts covering their positions within the market. In today's episode, I'm giving you 3 early Christmas gifts. Number 1, I'm updating you on the weather, which is responsible for this turn to the upside. Number 2, we're going to dive into the charts and make sense of the technical levels. And then number 3, I'm going to show you an options trade that I placed today and talk about why I pulled the trigger. Let's go. Okay, the overnight GFS model trended further colder December 10th through the 17th, adding 6 additional heating degree days. The European model was milder trending through early next week, but colder trending December 11th through the 15th, which is going to add about 8 heating degree days for the 15-day run total. Although still not as cold as the GFS model by 20 heating degree days. Where the data has been most notably colder trending is for December 11th through the 13th as a strong cold shot sweeps across the Midwest and the Northeast. Right here. Look at this graphic. This explains it all. This is the reason why we're seeing such a big upshot in UGAZ today, and this should continue on hopefully for the next few days. But remember, we got to look further out when things are going to get more mild. If you keep reading at natgasweather.com, you'll see that we're going to get this big cold shot, but then things can ease again moving forward. That means you're going to want to take your profits soon after we get this big push to the upside. So with that out of the way, let's jump into the charts and let's talk about technical levels on this exciting day. Okay, here we are, natural gas, NGF20. We've got the futures chart up on the daily time frame. And oh my goodness, between yesterday and today, we've seen a full turnaround in price action and a hard move back to the upside. Now, as we know, after I just went over the weather, this 14-day forecast, this cold shot that's coming in, remember the graphic I just showed you, that is responsible for this hard push back to the upside. So we have to be really careful about when we take our profit. If we hold on too long and let this cold shot drift off the radar and see a warming trend 14 days out, prices are going to tank again and you're going to get stuck holding the bag. So be very, very careful and watch that 14-day forecast. That's super, super important. So right now, we pushed way down to a low of 2.27 on the January futures chart for /NG. Then today, you can see we pushed all the way back up, touched our overhead resistance level. Now remember, this used to be our support level, but now that we've broken down through it, we've pulled back up, we knocked right into it, and that is now acting as overhead resistance. So we got to be really careful on this one. As you can see, it got rejected, and you can see selling pressure has come back in. I think some of this the violent piece of this move, I think, could be due to short positions being stopped out and covered. A lot of people shorting the market, but then you get news of this cold blast coming, and blam, it just starts to blow through the stop losses of a bunch of short positions. So I think that's part of the reason why we had such a hard move back to the upside. So now let's jump over and let's look at UGAZ. And let's just see how it did today. Let's take a look at the chart. I know it's not as impressive as the natural gas futures chart. It's a little more spotty. But as you can see, this big green bar, when people saw this forecast of cold weather coming in, this big cold shot, we got a rise in volume, as you can see right here. We got a massive gap up, and then we had a run up to the highs of 1134. Now, I know this was just 1-day price action, but I hope if you're holding a bunch of shares and you were up on the shares at all, I hope you took a little bit of profit up towards the high of the day. As we pushed high and started to slowly drift back down, I hope you trimmed a few shares just to keep yourself safe and to just put a little cash in your pocket for the ride deeper into winter. We've now pulled back. We're trading at 10.56, but this sets us up to look really good moving into tomorrow. If I had to guess, I would think that we're going to gap up again
and move higher. Now, one thing we have to watch for, and I'm going to draw it real quick, just because I think it's pretty important to note, right here, this is the bottom of our gap. We gapped down. Now we're starting to fill that old gap. That gap ran from here to here, right in this channel. And when I say here, I just mean about 10 bucks all the way up to the top of the channel, which is about 11.80, right in that area. Now, we could fill that gap tomorrow, get up to 11.72, and then get rejected. So if we hit 11, say 11.75 tomorrow, take a little profit if you have it. Take a little size off and just wait to see what happens. If it pulls back a little and you took profit and then it surges up to this next level, take a little more off at 12.5 and just kind of sell into strength until we get propped up above here where you could add back for the continued move higher. So we got to watch this very, very closely, and we got to watch that 14-day forecast. That cold shot, you can see the power of that. That changed everything. And now, if after that we see a warming front or easing off of this cool shot, then we've got to be careful and take our profits, sit on our hands, and wait for the next cold shot. Right now, things are looking really good for a potential gap up again tomorrow. Let's look at DGAZ and just see what its levels look like right now. Wow, so you can see DGAZ, big gap down, pushed all the way down to the 50 simple moving average, blew through the 200, and got down as low as, let's see, 126.41, and it had a high of 148.24. So that's incredible. What an incredible move in price action today. So DGAZ, big push down. UGAZ, monster push to the upside. Not as impressive as I thought we were going to see based on the futures chart, but nonetheless, we're looking a lot better. And with that cold weather on the horizon and the most recent news being cold, with that graphic I showed you, we're looking much better to continue moving to the upside, hopefully. But again, because we've got this big resistance level, we got to make sure that that's a profit-taking zone until we clear it, pull back and test it, and then start to move higher. We have to take some profits.
All right, as promised, now I'm going to show you one of my options trades that I took today. I'm going to go through why I liked it, why I pulled the trigger, and what kind of profit and premium I made today. So let's dive into that.
All right, let's dive into some options talk now. I've got ticker ROKU, which is Roku. And as some of you may know, Roku had a big push up. This stock's a big mover. It's had some wild swings to the upside. It's had some wild swings back down to the low side. Now, recently we've had a nice upswing, sort of kind of getting up into the low 160s, and then it just got hacked. It got dropped. It came right down to the 50 simple moving average. And anytime you get a big pullback like that, I like to watch a stock, see how it's acting, and then see what buyers do. See if they come back into the market. And if they do, I take that as a bullish sign that it's a pullback. People want to add to their size. And a lot of times I'll do what is called a put option. Now, a put option I think we've discussed before. I basically said in this scenario that I don't think Roku is going to drop below $110 in the next 45 days. So when I sign up for that contract, I get paid a small premium per share to sign and hold the contract, and then we wait to see what happens. If it stays above 110 for the next 45 days, then the contract just expires worthless and I move on. If it moves below 110 and it expires down here below the 110 mark, then I acquire 100 shares at 110. It can dip below and then come back above and expire, and it expires worthless. It's the final resting point on the expiration day. And that expiration date is out into January. So what I want to see is this dip and start to trend back to the upside and continue on its way into January and just expire worthless. If, however, it does drop below 110 and it expires and I pick up these shares, I'm happy holding 100 shares of Roku at $110. Now, what I want to show you that's really neat about options is, let's go to the options chain. So this is the options chain that I've discussed before. I'm going to move myself down maybe a little bit here or to the side. And you can see in here, you can pick any expiration date that you want. It's always on a Friday. I chose January 17th of 2020, which is 45 days out. If I click that one open, you can see my position right here. Now, when I chose the 110 strike price, which is the price that I don't want it to go lower than when I'm looking at a put option, it was what they call a 12 delta put. Now, the price on it has actually risen today since I put this option on, so now it's an 11 delta put. Now, when you're looking at deltas and you're looking at probability of this actually crossing your strike price, you get some different percentages in here. So the probability that I'm going to stay above 110 is about 83.74% at this point for 45 days to January 17th. So it's a high probability trade, and I have small size on in that I went ahead and I put one contract on. One contract is 100 shares. So in this case, when I put this trade on and it was a 12 delta, the premium was $2.25 per share that it paid me. And what that equates to is 100 shares times 225. So it was a $225, and actually I correct myself, it was a $275 transaction in premium. So $2.75 per share to hold the contract times 100 shares. So the premium cash I took in today was $275, and that money stays in my account no matter what. No one can take that from me. Now we just wait to see what the put option is going to do. So now we have to wait and see if it's going to drop below this line or if it's going to stay above this line. If it stays above and expires, then I just keep my $275. The contract is basically expired worthless and dissolves, and I move on to the next trade. If it does go below though, and I get what they call assigned, that means I buy the 100 shares at 110. Regardless of if it's at 100 or 60 or 80, I have to buy it at 110 on the expiration date. So this trade I like because we had the big pullback, which takes a big chunk of the meat, big pull out of the downside. If you put on a put option after a big move like this, sometimes there's likelihood that you're going to get a pullback, which isn't favorable for a put option because you're wanting it to move higher. A put option is a bullish options trade. So once I got this pullback, that's a big chunk, a big pullback in Roku. Now I'm comfortable after I see this green candle. I see buying start to come back in, people buying the dip, people seeing this as a great opportunity at a cheaper price for Roku. So then I go ahead, I sell the 12 delta put, and that puts me at $110 strike price, and I need to stay above it to expire out of the money. So there's your option trade for the day. Hope everybody was green. If you have questions or comments, drop them below, and we'll see you next time.